Welcome back to the Daily Crypto Deep Dive. Today, we are looking at one of the biggest stories in financial markets, and it is not just a crypto story. It is not just a Bitcoin story. It is not even just an Elon Musk story. It is a liquidity story. And if you understand liquidity, you understand why Bitcoin can look strong one week, shaky the next, and explosive when capital starts moving in the right direction. The story is this. SpaceX is reportedly preparing for a massive stock market debut, potentially raising around $75 billion at a valuation somewhere around $1.75 trillion. If that happens anywhere close to those numbers, it would be one of the biggest public listings in market history. And the question crypto investors are now asking is simple. Could a SpaceX IPO drain the same pool of liquidity that has been helping lift Bitcoin, Ethereum, Solana, XRP, Dogecoin, and the wider crypto market? Just before we continue, this episode is brought to you by Kraken, our official exchange partner. If you want a straightforward way to buy, sell, and explore crypto, Kraken is well worth a look. It's not financial advice, but if you want to check out the platform, use our link in the description. Not investment advice. Crypto trading involves risk of loss and is offered to U.S. customers through Payword Interactive. View legal disclosures at kraken.com. And remember, we are still running the 20 XRP giveaway for signing up through our link, so if you want to get involved, check the description, use the Kraken link, and follow the show so you do not miss the next update. Now let's get into the real point, because this is where the story gets interesting. Most people look at crypto as if every move is about crypto itself. Bitcoin goes up, so people ask, what happened with Bitcoin? Ethereum goes down, so people ask, what happened with Ethereum? XRP stalls, so people ask, what happened with Ripple? But a lot of the time, the bigger answer is not inside crypto. The answer is in the wider money system. It is in interest rates, bond yields, the dollar, stock market risk appetite, ETF flows, stablecoin supply, venture capital, and the question of where investors think the next big opportunity is. That is why this SpaceX IPO story matters. A $75 billion capital raise is not normal. That is not a small company floating on the market. That is not a standard tech listing. That is a financial black hole. It is the kind of event that can force big funds, institutions, wealthy individuals, and even retail investors to make choices. If you want exposure to SpaceX, and you believe it could become one of the defining companies of the next decade, you need money to buy it. And for many investors, that money does not just appear from nowhere. It has to come from cash, from selling other stocks, from trimming tech exposure, or from pulling money out of speculative assets. And crypto is one of the most liquid speculative asset classes in the world. That is the danger. Bitcoin has been lifted recently by a mixture of ETF demand, improving risk appetite, stablecoin growth, and the belief that the next phase of the market may be driven by institutions. But the same institutions that can buy Bitcoin can also buy SpaceX. The same retail traders who get excited about Bitcoin can also get excited about Elon Musk, rockets, Starlink, artificial intelligence, and the idea of owning a piece of SpaceX. The same capital chasing big asymmetric upside can move from one hot narrative to another. This is not about SpaceX being bad. In fact, SpaceX may be one of the most important companies in the world. The company sits at the intersection of space infrastructure, defense, satellite internet, artificial intelligence, launch systems, and maybe even future data centers in orbit. That is exactly why the IPO could attract so much money. The stronger the SpaceX story is, the more powerful the liquidity pull becomes. And that is the uncomfortable part for crypto. Bitcoin does not just compete with gold anymore. It does not just compete with cash. It does not just compete with Ethereum or Solana. In a liquidity-driven market, Bitcoin competes with every major opportunity that can absorb risk capital. It competes with NVIDIA. It competes with AI stocks. It competes with private equity. It competes with pre-IPO companies. And if SpaceX comes to market with one of the most exciting public listings in history, then Bitcoin may temporarily be competing with the biggest growth stock story on the planet. That does not mean Bitcoin collapses. It does not mean crypto is finished. It does not mean everyone sells their coins to buy SpaceX. But it does mean the market may have to digest a very large shift in attention and capital. This is where the timing matters. Crypto has already had a strong recovery phase. Bitcoin has been holding up better than many expected. The market has started to behave as if institutional demand is real, not theoretical. But when markets rally hard, they become more vulnerable to liquidity events. If a huge IPO arrives while traders are sitting on profits, some of them will take those profits. If funds need to free up cash, they may trim winners first. And if Bitcoin has been one of the winners, Bitcoin can become a funding source. That is the phrase to pay attention to. Funding source. When a big opportunity appears, investors often sell what has gone up to pay for what they want next. That can create selling pressure even when the original asset still has a strong long-term story. Bitcoin can be fundamentally strong and still pull back. Ethereum can have a powerful long-term case and still get hit. Solana can be building real usage and still suffer if liquidity rotates away from high-beta crypto. XRP can have a strong community and legal/regulatory narrative and still stall if the wider market loses momentum. Liquidity does not care about your favorite coin. Liquidity moves where it sees opportunity. Now, one of the biggest questions is whether this would hit Bitcoin first or altcoins first. My view is that altcoins would likely feel the pain harder. Bitcoin has the ETF structure now. Bitcoin has a deeper institutional bid. Bitcoin has the strongest brand in crypto. Bitcoin has become the first asset many traditional investors touch when they want crypto exposure. So if there is a liquidity squeeze, Bitcoin may bend, but the weaker parts of the market could break faster. That means smaller altcoins, speculative narratives, meme coins, and low liquidity tokens are probably more exposed than Bitcoin itself. Dogecoin could still move if Elon-related attention picks up, because anything Musk-related can create weird cross-market narratives. But in a broad liquidity drain, meme coins are usually vulnerable. Solana may hold better than smaller tokens because it has strong network activity and developer momentum, but it is still a high beta asset. Ethereum sits somewhere in the middle, more institutional than most altcoins, but still more sensitive to risk appetite than Bitcoin. XRP is interesting because it often trades on its own catalysts. Regulatory clarity, ETF speculation, banking partnerships, and payment narratives can create separate pockets of demand. But even XRP is not immune to global liquidity. If the whole market turns risk-off because investors are raising cash for SpaceX, OpenAI, Anthropic, or other major listings, XRP can get dragged into that move whether the individual XRP story is strong or not. That is why this story has to be framed properly. The question is not, will SpaceX kill crypto? That is too dramatic. The better question is, can a wave of mega IPOs create a temporary liquidity vacuum that slows the crypto rally? And the answer is yes, it can. But there is another side. A SpaceX IPO could also be bullish for crypto in a broader sense. That sounds contradictory, but it is not. If SpaceX lists successfully at a huge valuation, it could prove that risk appetite is alive. It could show that investors still want growth, technology, innovation, artificial intelligence, and long-duration assets. That kind of environment is usually not terrible for crypto. In fact, crypto often does well when investors are willing to take risk. So the market has to balance two forces. The first force is liquidity drain. Money goes into SpaceX, and some of that money may come out of crypto, tech stocks, or speculative assets. The second force is risk appetite confirmation. If SpaceX launches successfully and trades strongly, it may tell the market that investors are still hungry for major growth stories. And Bitcoin is also a major growth story. Ethereum is also a major growth story. Solana, XRP, and the rest of the market can benefit when people are confident enough to take risk. So the real danger is not simply the IPO itself. The real danger is if the IPO arrives at the same time as other liquidity drains. Imagine SpaceX raising $75 billion. Then imagine OpenAI, Anthropic, or other massive AI companies preparing their own listings or private capital raises. Then imagine bond yields rising. Then imagine the dollar strengthening. Then imagine ETF inflows slowing. Then imagine stablecoin supply flattening. Suddenly, the crypto market is not just dealing with one headline. It is dealing with a tightening liquidity environment. That is when things can become more serious. Because Bitcoin's bull markets are not built on vibes alone. They are built on flows. They are built on money entering the system faster than it leaves. ETF inflows matter because they create persistent demand. Stablecoin growth matters because it tells you there is more dry powder sitting inside the crypto ecosystem. Exchange balances matter because they show whether investors are preparing to sell or hold. And macro liquidity matters because crypto is still one of the most sensitive asset classes in the world when money conditions change. This is why the next few weeks matter. If Bitcoin can hold firm while markets prepare for a huge SpaceX listing, that would be a sign of strength. If Bitcoin pulls back but ETF inflows stay strong, that could be a healthy reset. If altcoins bleed while Bitcoin holds, that would suggest risk is rotating into quality. But if Bitcoin, Ethereum, Solana, XRP, and Dogecoin all start falling together while stablecoin growth slows and ETF inflows weaken, then the SpaceX liquidity drain argument becomes much more serious. The other thing to watch is narrative attention. Crypto is not only a market of capital, it is a market of attention. The more people talk about Bitcoin, XRP, Ethereum, Solana, Dogecoin, ETFs, regulation, and tokenization, the more energy the market has. But if SpaceX becomes the biggest story in finance, it can temporarily absorb that attention. Elon Musk already dominates media cycles. SpaceX already has a brand that reaches far beyond traditional investors. A giant IPO would pull in mainstream coverage, retail interest, institutional debate, and social media speculation. And if a $75 billion SpaceX IPO starts pulling capital away from crypto, we will see it in the tape before we hear it in the headlines. That is it for today's Daily Crypto Deep Dive. Drop your thoughts in the comments. Do you think the SpaceX IPO is a real threat to Bitcoin liquidity? Or is this just another Wall Street story that crypto will absorb and move past? Smash like, follow the show, check the Kraken link in the description if you want to support the channel, and we will see you at the top.